benchmark. I think it's constructive to address the fact, Josh, if you don't own it already, and you're turning on our program, which led with it today and has been talking about it high up in our A block, as we say, every day, can you still own it? If you don't own it now, can you buy it now? How would you answer that?
I would say before you pull the buy trigger, do yourself a favor, have your favorite LLM X-ray your existing holdings, including your ETFs, your 401k mutual funds. There is a very high likelihood that you do already have exposure to Micron, and that taking in an extra position directly into the common stock may not be the smartest thing to do right now. I was talking with Jan Van Eck last week. Van Eck, as many people know, owns the SMH semiconductor ETF. He's got a very good point of view just on the entirety of the space. Micron, differently from many of the other semi-related companies, is basically going through this massive uptick in earnings growth as a result of price increases. We know a couple of things. The first we know is that's rarely sustainable past a couple of years before other people start coming up with solutions. You can't just take price forever. And they've already taken a ton of price because there are only effectively 2 or 3 suppliers to the space. We also know the programs themselves that are requiring all this memory, the LLMs, the data centers, they will all figure out innovative ways to get by utilizing less memory eventually. It doesn't even take that to happen, Scott. All you need to do is hear one person like a Dario or a Sam come out and say, actually, our new model is going to be 20% more efficient in our memory use. And this stock could be at 700 in 2 seconds. So I don't love the idea of buying Empire State Building charts. And I want you to check and make sure you don't already own it before you buy something that's just 100x'd right before our eyes.
You know, Joe, I was talking with a well-known investor this morning who is as astounded as everybody else in the move of this stock and was still buying calls.
And I think buying calls is probably the right strategy, because if you don't own the stock today and you're going to buy it today, understand you're buying it for the near-term return. I say that because if you say to yourself, I'm buying it today and I'm going to hold it over the next 18 months or 12 months, then you have to understand you're going to expose yourself to a significant correction at some point. It's inevitable. Why do I say that? Because this right now has the most attention of any other stock in the entire universe.
That's why we
cover.
That's why we led with this move, because it is incredible to watch.
Let me support it with some evidence, okay? You have currently, on a daily basis, this stock trading somewhere near 60 million shares. That's well above its historical average.
Yeah, I'm a little shocked that, now keep in mind, Joe Terranova has a actively managed ETF that he manages. So it's not CNBC saying to buy calls. It's his own opinion. I'm a little surprised that Joe Terranova just said that, though, on TV. Very surprised at that.
Of 15 million shares. If you look at the options, which expire on a weekly basis, the volume on a daily basis continues to grow. The open interest continues to grow. So you used the word before, memeish. I don't know, Scott. I'll leave that to you. You be the judge of that, whether that's the right word to use. But there's excessive speculation in here for sure. I can tell you the market makers, the high frequency algorithm models are all participating right now in this name. And what they're trying to do is just capture near-term upside. Longer term, there is really strong fundamentals in place because high bandwidth memory, the capacity for this company, it's sold out for the entirety of 26, and the demand for 27 follows, and it can be characterized as being insatiable.
Memeish doesn't, by the way, insinuate that the stock doesn't deserve.
It's not memeish,
I'm
though.
talking in terms of the one-day price action moves.
You're right
alone.
about that. Absolutely.
Alone, like a 20% again yesterday.
For full clarification, Noto did not say he was buying leaps. He said he was looking into them. So let's not put words in anybody's mouth. I don't know if he bought any or if he's going to. He specifically said he was looking into buying leaps. So looking into is different. I don't believe he has bought any. I have not seen any filings, but he is obviously looking into buying leaps. That's a very important clarification that I feel I need to make. I don't want anybody thinking that he has currently bought leaps.
That's like what we saw in the heyday of the
But you
meme-ish
can't move
activity within the market.
you can't move a $2 trillion stock with chatter on Reddit. You can move a $25 billion stock.
The price action in this thing has made a lot of people sit back and say, "Man, it's
extreme."
So here's where my head's at on this. I was reading that article the other day about the market maker, that guy Joe Packey at Morgan Stanley, who's trying to figure out how to deal with SpaceX, right? And what he's saying is, I really need to be sure to get that IPO into the right hands, into long-term buy and hold hands. And so I've been thinking about this in relation to Micron. When you see Nvidia, it took years to go to $1 trillion, and you see 48 days on Micron, to me that screams that it is meme-ish, and the meme-ish part being, Scott, in that it is not in the right hands. It is not in the long-term, thoughtful buy and hold hands. So then I say to myself, if you were to buy it today, why would you buy calls? And I think you could still make money, but you need to be very clear that at this moment in time, there is not an investment thesis that you can make on Micron, but there is a speculation thesis. And you need to say, look, if I was going to make an investment thesis, I need to have a lot of clarity as to the next 2, 3, 4, 5 years of earnings. There is not enough clarity.
Well, no, you have a backlog. You have a backlog. There's clarity.
For the record, it's John Pacey, not Joe Packey, but nonetheless, please continue.
Sorry. Thank you for correcting on that.
Pleasure.
In the moment, I get all heated. Anyway, the point is, it's still trading at 10 times next year's earnings, right? Why is that? Because there's the backlog, but there's not enough visibility. If there was enough true visibility, it wouldn't be stuck at 10 times. But I think if you speculate and say, like, hey, where's the momentum taking it? What's going on with this meme trade? Is it going to take it higher? Could there be short-term upside from here? Then you do the calls, then you can buy it. But it's a speculation. It is not an investment at this point.
Liz.
I can't believe they're talking about calls. Oh my God. At least Jenny Harrington said it's speculation. I'm glad she said that. I mean, I should have bought calls when I bought the stock, but it is what it is.
Again, price target today, the way that the price targets are moving is incredible in its own right. Barclays today goes to 1175. They were at 675. 675 sounded reasonable. That's so 2 months ago. But now it's 1175 there. William Blair goes outperform. They name it the most constructive semi, that they expect sustained price increases in memory, which is going to drive up their revenue and their earnings potential. That is the fundamental backdrop to a T. Memory prices increasing, revenues are going to increase, the earnings expectations continue to go up. Thus, as crazy as the price action would suggest the trading has been, maybe it's all justified.
In semis broadly, perhaps it's justified over a long-term period. I think in a short-term period, the question here and the message that semiconductors are sending and what Micron is sending is that demand is outstripping supply. So prices are continuing to rise, demand will continue outstripping supply, and I think that's what's going to drive a lot of this. But the question that we're asking ourselves on this desk right now is really more of a technicals question. Is this the right time to enter a certain stock that's been up so much? When you look at the technical side of it, I don't think you're going to find a technician out there telling you that this stock looks good on a chart basis and it looks like a good entry point. So if you're really trying to make that decision from a trading standpoint, probably not a good time to jump on the semis bandwagon or jump on a parabolic chart bandwagon. That being said, I do think the fundamentals support what's going on right now. If we look out 12 months in the future, can CapEx continue at this clip? Yes. Can earnings continue at 20 to 30% growth every single quarter? I'm skeptical of that. So as things start to slow down and get a little bit more rational, the healthiest thing for this market to do would be to spread some of that love into other sectors and other industry groups, which would say that semis have to have a cooling off period first.
There's another one that's on the front page today too, and it has been, and it doesn't get talked about as much as Micron does, but Marvell reports, Joe, after.
All right. A lot to unpack there. Can this keep going? Yes. Yes, it can. Is it going to? I have no idea. My crystal ball is broken. The magic 8 ball is currently downstairs, and I have not gone downstairs to get it yet. But here is President Trump says he wouldn't be comfortable with China or Russia taking Iran stock. But yeah, no shit. Not that it matters. I mean, Russia has more nukes than us, I believe. Whatever. But look, can this keep going? Yes. I don't know if it's going to, but look, what Liz Young said is true. The fundamentals are supporting it with Micron. Maybe Micron should not have been this cheap. Maybe trading at a low PE was not the right thing for Micron, just based on the fact that, you know what? Even though there's a boom bust cycle historically, the earnings fundamentals are cash flow positive, earnings positive, and maybe it should trade at a more normalized multiple of 15 to 20 times. I don't know why Micron should trade at a lower multiple than some conglomerates out there that we could all name. But part of the parabolic move was because it traded at less than 10 times earnings. That was part of it. The CapEx cycle can, let me repeat, it can, I'm not saying it will, but it can continue through 2030 and beyond. We don't know. We haven't even got humanoid robots. We haven't even got full self-driving. This can continue for a very long time. We are in the middle of a build-out that you can't handicap for. Look, nobody knows what they're going to spend next year. We do know that the big five are going to spend $750 billion this year on CapEx. If they're going to spend $750 billion on CapEx, between Amazon, Oracle, Meta, Alphabet, and Microsoft, then who's to say they're not going to break $1 trillion next year? Alphabet just told you they're going to go from 70 to 190 year over year, and they're going to spend more next year. So what are we really talking about? This can keep getting crazier. We could be 1 trillion, 1.2 trillion next year on CapEx. Are we going to? I have no idea. But these companies are not just going to take their foot off the gas. It's not going to happen unless they all do it. And that's what I'm investing on. The fact that Nvidia is getting so disrespected right now is absolutely insane to me. And look, I get it. It's not where the story is right now directly. It's an adjacent story. Let's look at where we are, and then we'll get back to the Microsoft rant. Because I think the Microsoft rant's very important. And I feel that I need to make like a real big video about this. Reddit 153. Oh my God. Rocket Money. We need a 150 Rocket Money check. ServiceNow, Amazon. Look, thank God Amazon's up over 270. Micron 903. Salesforce reporting today, everybody. Don't forget that. Look at this. Microsoft 413, Nvidia 211. Captain Sleepy Time can't be happy right now. I'm not happy right now. This is ridiculous. I'm sorry, this is ridiculous. But look, the CapEx spend is real. The CapEx spend can continue to happen. We all saw the profitability metrics, but let's go back to the Apple Microsoft. There is no way Microsoft should be trading at 18 times 2028 earnings when Apple is trading at 29 with more growth. So they're more profitable, they have more forward growth, and they're trading at a discounted valuation to Apple. That's ridiculous. I don't like it. But it doesn't matter what I like. The market's the market.